Hi, Sarah with eXp Realty, and I'm here with Karen White with Fairway Mortgage, and we're going to kind of talk about what kind of loans there are out there, the four main types, right?
Right. As you said, that's the most common question you get from your potential clients. And there are government loans and there are private loans. The private loan is a conventional loan that is typically the fastest loan to and the easiest to qualify for if you have good credit. You don't have as much documentation, there isn't as many restrictions, where the government loans are USDA, VA, and FHA. Now with USDA, the property has to meet eligibility. And what I mean by that, Sarah, is that it has to be in a specific location that they consider to be rural. So you want to go on, you can go on their website, or that, I can check, or you can check to make sure that that property is in USDA. Eligible requirements. Also, they have an income based on county. So you might qualify in Johnson or Wake County, which is very few Wake counties are USDA, maybe around Zebulon. But each county has its own eligibility requirements outside of just the property, income, and how much the price of the house. So that varies by county. The next government loan, which is the most popular, is FHA. You only have to put 3.5% down. You can have a low credit score. You can have a high debt to income. It's the most favorable for someone to get started with.
That's what they call the first time home buyer, right?
No, that's the Federal Housing Agency, FHA. Okay. And it just has a lot more documentation. You need 3 years of taxes, 3 years of work history. And they're a little pickier about the property. You can't have any structural issues, even like a broken step or a stairway railing that is weak, a hole in the wall. You have to have, the home has to be in really good condition. But that's to protect you. USDA is a lot like that as well, because they want the well inspected. They want the septic inspected, because they don't want people to buy a home and then be saddled with repairs. The other government loan is VA, and that is restricted to people who have served our country. It's 0% down, and you can have a score as low as 580. And I have seen debt to income go up to 55%. And what I mean by debt to income is your bills and your income are divided, and we figure out the ratio. The basic difference between government loans and the conventional loan is typically it's a lower credit score, it costs less to get into, and it takes more paperwork. The conventional is fast, easy, because it's not a lot of paperwork. The appraisal isn't as picky, and you put more down. You can put as little as 5% down, but with USDA and VA it's 0 down, and with FHA it's 3.5 down.
Okay, so when you're going with a government loan versus a conventional loan, is there a difference of like mobile home, stick built? Are they picky about which one can use which? Yes,
you cannot use a USDA on a mobile home. You can use an FHA if it's FHA approved. And there again, that goes back to the standards of the house. But you can use conventional or FHA on a mobile home. And Fairway will do a 30-year on a mobile home versus some of the other companies will only do a 20s, which makes your payment a little better. Again, USDA will not do a manufactured home. VA will.
VA will. Okay. I'm trying to think of what else. I think that's about it.
Okay. Well, thanks for having me here, and I look forward to talking with you again.
Thanks for coming. Talk to you soon.